For those of you in the room who are not familiar with Oscar Carboni, I just wanted to go ahead and do a quick introduction. Oscar's been a MetaStock user and enthusiast for many, many years. He's been there really from the very beginning, 30 years ago, when we've been around. And so we've always been a good friend of his, and it's been a great mutual relationship, and we've followed him through the years. But let me give you a little background. Mr. Carboni started his commodities career while as a teenager in college, and through hard work and dedication to his craft, he built himself a successful business on the floor of the NYMEX and COMEX. And one day, he came to the realization that the world he knew so well was about to change, and he either had to adapt or become extinct. So Oscar went about reinventing himself in order to take advantage of the advances in technology that he had embraced years before. More success followed, and technology was still a driving change, and Oscar saw another opportunity for reinventing himself as a media prognosticator. He produced a daily YouTube video, Live with Oscar, which I know many of us are very familiar with, featuring bold predictions of the coming days trading in select futures. Oscar stuck his neck on the line daily and still does, and people began to flock to him, to his site for his projections. His analytical education and, yes, even his motivational presentation are really, I think, what sets him apart as a presenter and as a personality, definitely on YouTube. In fact, he's been parodied and profiled on all kinds of things out there, including an Eddie Murphy movie. And so he's actually a very well-known personality in cyberspace. He's cultivated a persona that is undeniably original. However, not in a case of style over substance, but rather substance with his unique style. It's his straightforward, humorous, and immensely captivating presence and uncanny predictions that has people clamoring for more. Oscar is a good friend of ours, and certainly he communicates in a way that gets things across, and he's one of the great prognosticators out there when it comes to the markets. So I'm real happy to turn the time over to Oscar Carboni. Take it away.
Well, thank you so much. And traders who have shown up, acknowledge if you can hear me. I am Oscar Carboni. I'm speaking to you via the microphone. Can you hear me now? Yes, very well. Very nice. Okay, traders, a round of applause to you just for showing up. I mean, markets are closed. It's dinner time, and you guys are here. You guys and gals are here watching a seminar or webinar, as we call them these days. So thank you for showing up, and I assure you, you will not have wasted your time. Thank you for that wonderful introduction. You know, well, I'm not even going to get into your background. Dave is a great guy. He's been helping me very much. He's a great tech support plus liaison for me at MetaStock. And he's very good with markets as well, and he's got some pretty interesting things about himself that I'm sure you'll find out. But this is about technical analysis, and what I like to do is I like to look at charts and decide what will happen tomorrow and try to figure out where we're going tomorrow. I'm trying to figure out where we would go tomorrow so that we can keep ourselves informed, and I can say this. Using technical analysis, these charts you see before your eyes right now is absolutely the roadmap to telling yourself where a market will go the next day. This is Apple Computers, traders. This is a daily bar chart. Just so that we're sure, my name is Oscar Carboni, and today is Wednesday afternoon, November 14th, 2012. What we are going to look at is a series of charts that hopefully will tell us what the market is going to do tomorrow on Thursday, November 15th. So, right off the bat, I'd like to show you this Apple chart, and for you fans, you Omniac fans who know me, you'll recognize that right about here, Omni came out and was bold enough to tell us that the top was in Apple, and we were done. And I started to do YouTube videos that the top was in Apple. Now, I am not trying to pat myself on the back because you, everyone in this room, could easily make this call for yourselves. The Apple chart started to put in this head and shoulders formation. After the head and shoulders formation, a series of bear flags started to form, and we went into this parallel channel. So right around the time we hit about 690, our technical indicators, which we have many, started to turn down, and the market put in this topping head and shoulders pattern. For you traders that do not recognize what a head and shoulders pattern is, it's basically picture a man, a person standing in front of you. This would be his head. This would be his left shoulder. This would be his right shoulder. When you have a market that starts to trade and develop this sort of look, in many, many occasions, it is telling you that it is the top of a market. We have something called the upright head and shoulders before your eyes, and that would be these three circles right here I'm showing you. Just to keep us on an even keel, there is something called an inverted head and shoulders too, traders, and that would be the exact opposite. That would be, let's say, someone standing on their head, where their head would be lower and their two shoulders would be higher. This is an inverted head and shoulders, and I'll write that in for you so that we are clear what we're looking at. You have an inverted head and shoulders. An inverted head and shoulders generally is bullish and should make the market go higher. And as you can see, this worked very well. Well, the inverse of that is this upright head and shoulders that you see right here. It's an upright head and shoulders. Should make the opposite thing happen. And lo and behold, look at the move that ensued. Since then, we noticed that we had the Omni or the OTAPMA, the Omni Trading Academy's proprietary moving average, was breached. When that was breached, we expected it to go down to the 200 bar moving average. That was also breached in the form of a strangely but still formed bear flag. Now, traders, we would expect even lower out of this bear flag, and let's include today's pricing in and see if we can get an update. So far, today, we just loaded in, and we are now getting below the flag. As you can see, if I extend this line for you, we are now getting below this flag, and we will probably head down towards the bottom of this parallel channel. Now, is a head and shoulders always considered a top? Question in the room? No, it's not always considered a top. But I will tell you this. If it's a large head and shoulders, like this one started in August, right? So, you need to qualify what you're looking at. In August, we started this head and shoulders. It lasted all the way until October before it finally broke. That's a big topping head and shoulders. So that we would think is definitely a topping pattern. When you see a head and shoulders that is smaller, let's say you had a head and shoulders that only lasted a small while, 2 weeks, that would usually be considered a continuation pattern. So there is a difference. If it's broad-based and takes a few months to make, it's a topping pattern. If it happens very quickly, like if the whole head and shoulders was here, it would probably be bullish, not bearish, a continuation pattern. But the one we're looking at starts in August and goes all the way to October. That's a topping pattern. So that's what we called for. And traders, I'm not doing backseat quarterbacking here for you. I went out on YouTube and started doing videos when we were trading $6.95 down to $6.90 in Apple. That's up here. And I did a live seminar for MetaStock in Vegas on the Strip at the Monte Carlo Hotel where I showed this chart and we were still up in the 670s. We broke all the way down to 500, 5.25 we've seen already. Big move called by technical analysis, pure and simple technical analysis, and that is what we like to use, and that's what I find MetaStock is wonderful for. It gives you a great platform where you can pull indicators, you can pull lines, you can find simple formations and figure out what's coming next. We also gave an Apple short for last night, and we expected Apple to break down lower today, and Apple sure did break down. So there's your Apple chart, traders, and we have many other charts to look at, but I thought I'd start with Apple because Apple, everybody seems to either have an Apple device in their hands or they own Apple stock. It's a big percentage of the NASDAQ, which we like to call the NAPPLEDAQ these days, because I think NASDAQ belongs to Apple, but the lower Apple gets in price, the less hold it will have on our NASDAQ. But let's move forward. Next chart I would like to present you with is our ES chart. So let's pull it. Traders, E-mini S&P. Look at this chart. We seen the double top. We called for the double top because we have a rule at the Omni Trading Academy. And this rule is solid, ironclad, and we use it always. And the rule is when we see a double top, we sell a double top. That is a rule we never break. It is one of the rules at the Omni Trading Academy, and it's what we put out in a video when we seen the double top. When we see a double top, we sell a double top. Write that down. Remember it. I want you to live this as traders. If you see a double top on a weekly chart, it means twice as much as the chart as a double top on a daily. But a daily, usually a double top, will work 90% of the time. It is something that when you run into it, you will be very happy that you did. So look for your double tops, sell double tops, don't be afraid of them. So we showed the double top, and the market broke from this double top here, came all the way down to here at first. We rallied back up, and I said this will now be known in history as a triple top, and the night we got up here, I put this eclipse out there, made it nice and dark for everybody, and said this will now be known as a triple top, and we will come off a bit. Once we come off for a while, we will eventually take out this triple top, and that is what I expect going into next year, that we take out what is now considered a triple top, even though all three tops didn't hit the same price. However, we're talking about today, and today is something we're living with. We called for the double top, knew the market was going to break. Since the double top was formed, we've gone into this parallel channel. But note what else happened, very, very important. We broke down through this major support line here. Major support. Why is it major support? Well, just look at how many times you've gotten near this line and held once it started. You get near the line, you get a bounce. We get near the line, we get a bounce. Same thing happened on the top end. So very, very valid trend line. Well, you break the trend line and go into what we recognize next as a bear flag. Traders, this stuff just fits in. Watch this. Then you go into a bear flag. And once the bear flag gets formed, it's the beginning of the end for this market, and it's exactly what's going on now. Here's your bear flag. If I pull away everything else so it's not confusing to you, you will absolutely see that bear flag jump right out at you. So let me just remove a little bit of this stuff so it looks a little cleaner. Okay, so you look at this bear flag and you recognize that it absolutely did its job, and I'll show you what its job is. A bear flag, you can easily get a projection off of a bear flag, and let me show you how. This is a very simple projection. Anybody can do this, and you will be amazed at its accuracy. You simply take the height to low, the height, the exact height of the flag, and you'll have two projections. You will take this projection and drop it here for an aggressive projection, and you will drop it here, the very same line, for a conservative projection. Here was your conservative projection, and look at how well this works. Here was your aggressive projection. Right there. Look at the projection and look what happened. Here's your projection. Here's how low we got. It was almost exact. Do you see that, traders? Does everyone see how this works? Do you see how I did that? Very simple, right? A simple technique. But you can't argue with simplicity when it works so well. These are techniques I literally teach at my Omni Camp. It might seem trivial, but I kid you not, there's a lot of points in something like this if you handle it properly. Now imagine if you knew when we dropped out of this flag, we'd go right here, because we did go right there, and this projection was made before we got there. Now, what else happens? You know, the analysis, it all comes together, and it makes you recognize that it's certainly not voodoo, and it's certainly not happening for no reason. Everything comes together in analysis. Note that this projection, which worked well, comes right to the 200 ball moving average at the same time. And it comes down to the bottom of the parallel channel. So all of this stuff meets right here. Do you think that that met right here for no reason at all? If we move this over, it's all in the same spot. Do you think that everything meets right there for no reason? That's technical analysis firing on all 8 cylinders for you. If you know how to read these charts, you will become very, very good at calling the next move. This is what I do every day to figure out what's going to happen tomorrow, of course, with a huge amount of indicators and other things that we look at. But the chart itself tells you almost everything you need to know. So there's your S&P chart. Here was your bear flag. And let's just get this line out of the way too, just to move everything out of the way. Here was your bear flag. Works really, really well. The projection was picture perfect. Now we are piercing the 200 ball moving average. I contend we cannot hold above the 200 ball moving average. I have done very many videos in the last 2 weeks depicting the 200 ball moving average in S&P, and S&P is a follower. And the fact that the follower is above the average, but the NASDAQ, the transportation average, the Russell, the industrial average are all below the 200 ball moving average right now. This teal line, that means the S&P has to go lower. So last night I put out a recommendation and said the S&P must break the 200 ball moving average. It can no longer hold above. The S&P today did actually break the 200 ball moving average and went down to about here. That's where the high and low would come, showing you right now for today, but I gave them that information yesterday. You can ascertain where it will go tomorrow using these very same techniques. So let's see why I would think the S&P has to break. Right now, the S&P, as far as last night's analysis is concerned, we're going to consider today did not happen yet. We are looking at Tuesday night's analysis for trading Wednesday. This is what the S&P looks like on Tuesday night for trading Wednesday. But that's just the S&P. That's a follower. I want to take a look at the NASDAQ, one of the leaders. So let's go there. This is a wonderful chart which shows you everything that you need to know. Here is your NASDAQ daily bar chart. Shoulder, head, shoulder. Do you see that on the X? Shoulder, head, shoulder. It's crystal clear. In fact, if you really want to take this further, you have a shoulder, a smaller head, and a shoulder right inside of the head of this head and shoulders formation. So if you really want to break this down, we pull the head out of the way, and you have a shoulder, head, shoulder sitting there inside the head of a head and shoulders formation that started in August and went all the way out to October. So that is a head and shoulders topping pattern once again. And it's in the NASDAQ. And then we recognized the bear flag and we drew it in and told our traders, let's continue to get short. But note this. The NASDAQ is a leader. It leads the S&P around. Do you see where the NASDAQ is in relation to the 200 ball moving average? This is the 200 ball moving average. Where's the NASDAQ? Everyone can see that. Answer the questions, please. There's many of you in this chat room, so let's participate. Where is the NASDAQ? Correct. It is below the 200 ball moving average. Okay. Now, if a leader is below the 200 ball moving average, does everybody remember the game Follow the Leader when we were children? Remember, you got behind somebody, and if he moved left, you moved left, and if he went right, you went right? Well, if the NASDAQ moves to the right, the S&P moves to the right. That's the way this works, but after the NASDAQ gets there. So I looked at it and said, okay, let's look at the leaders as opposed to the follower. The follower, remember, let's go back for a moment. Remember these pictures, because to you, this should be important the next time you see this when you're not with me. The follower, back to S&P, is below the average. Clearly below the average. Is above the average, clearly. but it's a follower. We go back to that leader. The leader is below the average. It's a leader. So you scratch your head and say, whoa, S&P must have to follow. But I'm not convinced when I only look at one leader, so I must pull another. And I say, where's the Russell? Because Russell's considered the leader over the S&P, and I pull a Russell chart. And when I pull the Russell chart, I notice, where's the Russell, traders? Answer this. It'll help you. This exercise will help you. Where's the Russell? Another leader? Below the 200. That is correct. Viorel says on the weekly support, it is right there. You are correct. We'll get to that, I assure you. Believe me, I've looked at that Viorel. I know it's there. We'll get to it. So correct, traders. Thank you for participating. I love the participation. You guys are great. All right, so here we are below, another leader below the 200. So let's not even waste time. Let's go to another leader. Let's go to the transportation average. Let's just create it for you because it's not going to create itself the way I was hoping. So we're just going to go like this and say File, Open. My apologies. I lost my brain for a moment, guys. I just forgot what I was doing, to be honest. All right, so here we are. This is the Dow Jones Transportation Average. Look at the 200 bar moving average, which is right there. We'll label it because I love to label things like that so I don't forget next time I look at it. So there's our 200 bar MA. We know it's right here. The leader, now this is a big leader. This guy is a huge leader of U.S. indices. It's the transportation average. This leader has just fallen apart, and let's label that so you know what we're looking at here. Dow Transportation Average daily bar for you. All right, so the 200 bar moving average, we are below. We just broke below OTAPMA, which is our Omni Trading Academy's proprietary moving average. Look at the major dump that took place. Now, if you look at this chart in another light, you'll also recognize that we're breaking down from an apex. You can take it from many areas. Let's just take it from here. But this is an apex that's beginning to break down. It's got a ways to go, but look at where we are right now. So there's your apex. We're about to hit the bottom. I say we just take the bottom out without stopping and continue on. But we'll see. We take this one day at a time. So transportation average, another one of the leaders, again, below the 200. The theme is, what do we do with S&P? It's above the 200. That's our theme right now, right? I'm going to keep going back to it. What do we do with S&P? S&P is above the 200. Leaders are below the 200. So we are trying to figure out what happens in the S&P on Wednesday today. Even though the day already happened, we're looking at last night's analysis. Should the S&P break the 200? Absolutely, traders. The other markets that we're looking at already have. Why shouldn't the S&P? But let's move on. Let's go look at the Dow now. Now we're looking at the Dow, and I guess by now you already know what average this is. Traders, why I am really reiterating the 200 bar moving average for you is this. In my almost 31 years of doing this now, being an analyst and trader down in the pits, on the trading desks, you name it, I've been all over the world. I've traded in Hong Kong, I've traded in London, I've traded in Africa, I've done this from everywhere. This is what I do. It's what I live and breathe. So kind of watch what's going on here. The 200 bar moving average is something I've learned in all my years. The big fund managers key off of this thing. They are sellers when you get below it. They are buyers when you get above it. And look at how that makes sense. They're buyers when you get above it. They're sellers when you get below it. And as you can see, that's exactly what the market seems to do. That's because the big money comes in and sells. So now we're looking at another leader, and it is definitely below the 200 ball moving average. So we know the S&P goes below the 200 ball moving average, and that is what it did today. It went below the 200 ball moving average. Now, look at this support line. Look at what's going on here. We just broke this major support line. Major support breached. Traders, I'm worried about our market right now. I was very optimistic a month ago. When you see action like this, you have to start to worry. Now, that's when you look at daily charts, and that's all we're looking at for now. We will go to the weekly, and then you'll find that you won't be nearly as afraid of these markets. Once we do some weekly homework, let's continue with our daily homework. So, there are other factors here that make a lot of this take place. One of them is your dollar index, which we're going to look at now. Dollar index. It is running right into the 200 ball moving average right now. As we speak, it hit it yesterday and it hit it again today. And looks like it's having a little bit of difficulty getting above. This is what I like to call a do or die area. And it absolutely is. It's a do or die area. We consider it a do or die area because we know that the fund managers are going to key off this 200 ball moving average. If it does not get above, we're going to crack. If it does get above, they're going to continue buying dollars. Now, buying dollars makes the euro currency get weaker, makes our indices get weaker for a while, and then it actually changes. But the beginning is the indices will get weaker. It will make our grains get weaker. The stronger the dollar goes, the cheaper your grains will get, and other commodities. Now, that's really simple, traders, because commodities are priced in dollars. And if you just took something, take a look at this line right here. If you take a simple teeter-totter, which, I'm not the best artist on the planet, so bear with me, but if you take a teeter-totter, and on that teeter-totter, if on one side you decided you were going to put commodities, and on the other side, you decided that you were going to put the dollar, which is exactly the way the world works, by the way. Well, what happens with the teeter-totter is if the dollar side goes up, the commodity side goes down. That's the way a teeter-totter works. And the commodities go down, and the dollar goes up. So if the dollar continues in this pattern, the commodities will continue to get weaker. It's another way to gauge whether or not you want to be long or short, let's say the grain markets. You look at your dollar. The dollar is king. If the dollar tells you up, then the likelihood is you'll find bearish scenarios in your charts for the grains and maybe metals and meats. Just depends on what metals you're looking at. So I like to look at the dollar as well as the other markets to see if the dollar is doing opposite of the other markets, which it should be doing in most occasions, but it does trade hand in hand with bonds. So you have your dollars to consider, and they're looking decent right now. And if you take this and draw the next trend line that's coming in, we tested it today, but stayed above it for now. So, let's not say it's failing at the 200 ball moving average yet. Let's say it's testing the 200 ball moving average, and we will know within a day or two if it fails. And if it fails, then we look for the downside of this channel. When you look for the downside of this channel, we will then look for the upside in the S&P, so it gets tricky right away. Remember, we're day traders. For now, we're not looking for anything more than what you see here as a day trader. So, this is your dollar index, and is it updated for today? It is updated for today, so this is what it looked like by the close of today. So, we continue on. I want to show you the bond market. Bonds are interesting here. look what the bonds did, traders. Oh my goodness. QE, whatever you want to call it. Look out. Because these bonds, there is no way to stop what's going on here right now. The bonds were in a nice topping pattern for quite some time. And in fact, if you look at this, the bonds were starting to put together what looked to me like a big head and shoulders here. And I said, whoa, if this is what I think it is, this is going to be a shoulder, a head, a lopsided shoulder with a failed head test and then a breakdown. Because you have a shoulder here, and if you really want to look at this shoulder, you can kind of change it and say, this is the shoulder. You know, more in line with the one to the right over here, but nothing has to be exactly perfect when you're looking at a fine art. This is an art, not a science. So it doesn't have to be an exactly perfect level head and shoulders. It just has to look like one. So here you are in bonds. You have what looks like a big old head and shoulders. Starts in June, goes all the way to September, but no one on this planet seems to be bigger than the Fed at this point in time in the bond market. And the Fed decided it was going to buy more, and I guess even technical analysis can't stop that, right? Here's what had happened with the bonds, and they were looking fantastic for a while. After we thought we had a topping head and shoulders pattern, and then we had the failed head test up here, went towards the top of the head and failed and started to break, we thought the top was in. And why? Look what happens next. You start failing miserably at my Omni Trading Academy's proprietary average. Miserable failure after miserable failure. But on this day, the president got reelected, and we took off, and now we are above this parallel channel, traders. Being above this parallel channel means this thing wants to take off. Bonds want to go higher. Bonds are a leader, and so is the dollar. It's not a follower. Dollar leads, not follows. So bonds say higher. There's no way you can think anything else is going to happen because they're enormous and controlled by the Fed at this time. And I've learned in my 31 years, never, ever, ever fight the Fed, ever, because you just can't win. So these are your 30-year bonds. So your 30-year bonds, as you can see, looks to me like they want to go higher. Nobody's going to stop that right now unless you got more money than the Fed, and no one does because the Fed has a printing press. So I don't really trade the bonds. I haven't traded them in about 2 years. They used to be one of my favorite markets, but you can ask my OmniX. I stand clear of the bonds now because I don't have pocketbook like the Fed does, and I never will. So I don't even bother to try to compete in their arena. It's like getting to home plate at Yankee Stadium with a wiffle ball bat in your hands. It's just not going to work. You're not going to be able to hit the ball, so don't go there. So I personally don't think anyone should be in bonds till the Fed is done with bonds. But if you are going to trade bonds, you're probably going to be buying dips. So we move along. You got to see some of the great calls that we were able to make with technical analysis before it happened. Here's one for you gold bugs. You're going to love this. Take a look at this gold chart, traders. For you gold bugs out there, you could ask any of my OmniX because I did this live in a class, and then I did this live in a seminar before it happened on the strip. This trend line here, let me come in just a little bit. This trend line here in gold, starting up here, this trend line, and I'll mark it. This is your gold daily chart. It started here, connected again here, and I just extended it out. And when we started to get near it, I drew in this bull flag and did a whole video about this. And believe it or not, a live seminar, and said, look, big bull flag building right above this major resistance, and it's above the 200 bar moving average. The bear flag built. I called for the run up. On this day, I called for a blowout in the gold, and we've had our blowout since. That is technical analysis, once again, firing on all 8 cylinders, traders. Now, understand something. I am not showing you a call that I figured out after it happened. I put this out before my OmniX eyes in videos and on my Omni recommendations and in a live seminar and said, look, you don't build a bull flag on top of a big resistance line and above the 200 bar moving average for no reason. This means blowout. Now, you want to see that simple technique work again for you, traders? You want to see the simplicity of calling the next move? If you just wanted to tell me where we would go out of this flag, you would simply do this and watch how perfect this is going to work. Well, if I could grab that little trend line, it would work slightly better. All right, I dropped this where we blew out, and voila, look at that. Compare the blue line to the line right next to it. That was our conservative. It's perfect. I mean, it's picture perfect. Now we go with the aggressive. We expected at least this if we got above the conservative. So that flag worked perfectly, and away we went. Now look what's going on here. We came back down, tested the 200 bar moving average, and put in an inverted head and shoulders. Traders, a test. What does an inverted head and shoulders usually give you? Please answer. From what I've shown you already in this lesson, what do you get when you see an inverted head and shoulders? A rally. Very good. Thank you for participating, Omniacs and traders alike. So now you would expect some form of a rally out of this thing, right? Up, up, up we should go. That's what an inverted head and shoulders would normally give, especially that it bounced off the 200 bar moving average. So there's your gold. Very easy call to make. We were able to project that call before it happened, and away we go. Let's go look at another metal. Let's go look at your silver. That's a very interesting market right now, by the way. What do you see in the silver, traders? Look at this area right here. Above the 200 bar moving average, above the Omni Trading Academy's proprietary moving average in the form of an inverted head and shoulders, and it follows gold. Looks to me like if the dollar wants to move lower, these metals are moving higher. Then there's Dr. Copper. That's a crazy little market, traders. Let's go look at the copper. Dr. Copper. I am going to just give you a moment to tell me what you see here. I'd like for you to tell me what you see in this copper chart. I'll wait on the traders alike, MetaStock users. Please tell me what you see here. We have someone that says V bottom. That's interesting. I don't see that. Okay, everyone has their opinions. They see bear flags. Almost everyone sees downside coming. Somebody's seen a bottom. Now, let me show you something. A couple of things. First, I want to convince you of a few techniques that work really well. I tell you that the inverted head and shoulders can be bullish if you read it properly, right? So, inverted head and shoulders here. What's the next thing that happens? And we could even make this shoulder thinner. Inverted head and shoulders here. What's the next move that takes place? We go higher. Now, wait, watch this. After we go up, what forms? A bull flag. Look at this. This is just 101 analysis, just firing on all 8 cylinders. Create the trend, create a parallel trend line, and voila. So now you have a bull flag. The inverted head and shoulders, bullish, goes into a bull flag, bullish, and a blowout takes place. Now, this stuff is working great, right? Let's continue. Watch this. Now you qualify the head. You qualify the shoulder. And you say, all right, we got a head and a shoulder. It looks to me like we need to build a right shoulder. But what does that really mean? All right, so we got a left shoulder, a head, and a halfway made or 3/4 made right shoulder. Does that actually work? We see the inverted head and shoulders work, then the bull flag worked. All right, so those two worked. What makes you think this one will work, Oscar? Why are you showing us these head and shoulders patterns? This may be a question you're having, so let me show you something very interesting on this chart. You see the 200 bar moving average right here? See where it cuts through the head of this head and shoulders? The next thing is a big down move. Well, watch this. Oh, look at this crazy little formation that jumps out of nowhere. Shoulder, head, shoulder. 200 bar moving average goes right through the head, and what happens next? We tumble. You see that, traders? Look at this one right here. This stuff works really, really well. The upright works, you have the breakdown. The inverted works into a bull flag, you have the rally, and now we have a big head and shoulders building. So, if that head and shoulders is real, when the right side fills in a bit more, the next thing that happens is a breakdown, right? First, we got to fill in some days, right? You got to go up and down a little and down and up. Got to get our days in there. But once we mess around over here for a little while, the next thing that should happen at some point is the downside. So I hope that's not the case, because copper is generally a decent indicator of whether or not the economy is picking up or slowing down. So we'd like to think economy is going to pick up, especially next year. But this is what we have before our eyes today, traders. The beauty of what we do is we're day traders. So this could change by tomorrow, and that'll be that. So maybe we're about to tank, and tonight's analysis says yes, but tomorrow's analysis might say time to buy it again. And that's the beauty of doing your analysis every day. And what we like to do at the Omni Trading Academy is we like to get out of positions before the day is over, so we do not get this. And this is something that affects many, many traders out there, and you got to be very careful that this doesn't happen to you. It's called, and of course this never lets me write a whole sentence without doing this, but I'll get it out there for you. Traders, this is a very, very important clinical term. Everybody should know what this is. It's called confirmation bias. And what confirmation bias is this. If I go home long copper today, even though I have a down day look here, I have a head and shoulders pattern here, I'm below the 200 bar moving average, and I would imagine my indicator base is bearish. But if I go home long the market, I can find 15 reasons on this chart to think it's bullish. And it's called confirmation bias. It is a clinical term that's given to traders that cannot decipher the difference between their position and their opinion versus where the market may go next. So I recommend to my Omniacs that we exit our trades every day before the close, unless we have a huge profit in it that we ride it overnight, but that's rare that we ride them overnight. We like to get out by the close so that when I do my analysis, I recognize copper is bearish because I have no position on right now. It doesn't look anything to me. It looks like I need to do homework. I do the homework, and then the homework says bullish, and I'm bullish. If the homework says bearish, then I'm bearish. But I can't be either of the two with a position on because I'm only going to be what my position tells me. So it's called confirmation bias, and Lewis says the same exact study was done with monkeys and came up with the same result. You know, we're a lot like monkeys, aren't we? So listen, confirmation bias will beat you up all the time if you don't get out of your trades. If you are a day trader, don't take your trades home at the end of the day. Let them go. Sit down and do your analysis at night when the dog's not barking, when the phone's not ringing and the markets aren't flying around. Come up with a clear picture and then approach the markets the next day. My opinion on how you should behave. Let's move forward, traders. A few more markets I'd like to show you. I think you'll find interesting. One of them I really like and have been trading it a lot lately is your sugar market. Sugar market, well, how do we say this? The sugar has been very, very good to us. Because it really has. The sugar has been doing the right thing for us. Now, you want to see another market that for whatever reason, traders, these head and shoulders formations are showing up out of the clear blue. I don't look for them. It's not the way I trade. It just happens to be the flavor of the month. This month, I look for anything that's the flavor of the month. But look at what's going on here. The flavor of the month lately, all over the charts, has been the head and shoulders, so why not show it? Look what happens at the top of this move. Head, shoulder, shoulder. The 200 bar moving average cuts right through it. And what happens next, traders? Look at this monster break. Here's what we do next after this head and shoulders. Boom, big breakdown. What comes next? Look at this. Head. Shoulder. Shoulder. Let's just make them look a little nicer so everything fits the way it belongs. Shoulder, head, shoulder, big down move ensues into this parallel channel. Parallel channel now tells us we can stay short the sugar for longer. This is what happened today. The sugar went up, hit the top of the parallel channel, came right back down, and you can definitely take a look at the short side of sugar once again. Now, what you got to watch out for is this could be a little baby head and shoulders building right here, an inverted right here. Let me make that a little smaller for you. This may very well be an inverted head and shoulders building right here, but it's so small that I wouldn't call it a bottoming pattern. I would call it a continuation pattern to the downside, even if it does give you a little rally first. Why? Because it's only taken 6 or 7 days to make the whole thing. That's not how you bottom. You bottom for several weeks. You don't bottom in 6 days. So I doubt that would be a bottoming formation. So it's probably a continuation pattern to end up at the bottom of this parallel channel. So the sugar market acts just like an industrial market. It acts just like a financial market. It acts just as if we were doing homework on a currency. The chart is the chart is the chart. The analysis works every time. If you apply it properly, you will get the result that you're looking for. Now, will you win every time? Of course not, because the analysis can only work a certain percentage of the time. So you are going to lose from time to time. But if you sell every double top that you see, sugar is a completely different market from S&P, right? Same sort of action. You had that double top and the market came off. If you sell every double top that you see, the odds are good that almost all of those times you will have a decent trade. Will it work every time? No, maybe 3 out of 7 you'll lose on a double top. But if you can win 7 out of 10 times, hey, not a bad formation, not a bad technique. So what I try to do is look for techniques that work over and over again, and then I use them the same way every time I see them. If it looks like if it looks like it happened in the past, it'll likely happen in the future. So there's a sugar chart. Now we can look at some other markets if you would like to look at something like, let's look at one of the grains. Start with soybeans. Soybean market. Very interesting what's going on here. Shoulder, head, shoulder once again. And I'm not looking for head and shoulders traders. I can't get them out of my hair. They're in my face everywhere I look. It's like another head and shoulders, really? But, you know, I've been doing this my whole life. Weeks like this happen, and then flags become the flavor of the month, and then maybe channels become the flavor of the month, and then maybe you get into inverted head and shoulders or F flags. Whatever it is, that's what we deal with. We're day traders. So here you have a head and shoulders big topping pattern. Then you go into a smaller continuation head and shoulders topping pattern. You break below the 200 severely and break down. But if you look at this, it's more than just that. Watch this. It's also a series of head and shoulders inside of the head and shoulders. This was clearly a topping pattern. This was the second market I called as a top in the grains. I started with corn, and my soybeans was my second call. So you have an inverted head and shoulders there. You have an upright head and shoulders here. Watch this. And in fact, you have more than that. If I just keep drawing these, I could just keep lending shoulders to heads and moving sideways. Watch. So now you have this head and shoulders. But if you wanted to, you could literally take this shoulder here and put a head here. And then you can use this head and shoulders. You can go shoulder, head, shoulder, shoulder, head, shoulder. Inside of one big shoulder. And you move up to a head, and you got a head and shoulders. You move down to a right shoulder, you start to break it, and you go into another head and shoulders. Then you break the 200. When we called top in this market, we called top somewhere up here. And so far, so good. We did it because we recognized the major head and shoulders was forming, and we were starting to break down. We had the multiple head and shoulders inside the head and shoulders. Not such a difficult call. And that was one of the reasons why we thought soybeans now is going to join corn and have topped out. Let me show you what a corn chart looks like. Traders, 8 weeks ago, on camera, we got in front of this camera when the grains were booming. They were rallying, and we called top in corn. It was right about here. We called top in corn, and since then it is exactly what has been happening. I'm just typing in the room so that you read it. The question was, the 200 ball moving average didn't quite cut through the head. It does. You don't even have to have the 200 ball moving average, and I wrote 2,000. That should be 200. You don't even have to have the 200 ball moving average on your chart. The head and shoulders works standalone. Forget about the 200. That's just a confirming indicator. So about 8 weeks ago, we called top in corn, and so far that has been a very lovely thing. We used our big rounded arcing top tool, and the last time we came to it was a few days back, and we bounced off it and broke again. Now we have this descending wedge. We broke out of the bottom of that. We're going back up to test the descending wedge, and then likely more downside to come. So I see more downside coming in the grains as time passes, and I don't think we've looked at wheat yet. Let me show you the wheat chart because that one's very interesting. Look at the wheat, traders. Wheat daily bar. It's in this huge parallel channel. At first we thought it was a bull flag, but I don't think a bull flag can be this big and still be called a bull flag. I don't know what to call it at this point, right? So let's just call it a parallel channel, because if I ever see a bull flag this big for real, the market's never going to stop going up. It's going to go up forever. So I said, you know what? Let's not call that a bull flag, because I don't even know how to qualify it, right? Let's just call that a parallel channel to the downside. You've gotten below the 200 ball moving average, but here's what's interesting. Excuse me, you got below my Omni Trading Academy's proprietary, and you're above the 200, but here's what's interesting. 3 days ago, I put this chart in front of everybody, and these 3 days did not exist. And I said, we're going to hit up here, and then we're going to go short. And I put this circle in there with nothing in it. We hit up there, Omni called for the short, and we broke down almost right to the bottom line. Now look at how many times this trade worked. 1, 2, 3, 4, 5, 6. 6 times this trade has worked for you so far without risk. It's been a wonderful, wonderful trade. The wheat. You can't be in it every day, but when it sets up, it's been perfect. Now, it's bounced off the bottom how many times? Let's count them. One, let's not count the first one because that's not a bounce. So it starts here. It hits the top, bounces. 1, 2, 3, 4, 5. This is going to be its 6th time. Forget it. There is no way it's holding this time around. When it hits this time, it goes. Keep your eyes peeled on that wheat. That is my technical opinion of the wheat. When it hits that line this time, even if it hesitates, it goes through. So these are the charts that I wanted to show you. Certainly want you to remember this above all of them, because this is the one that most of us like to trade, the E-mini S&P. This is the one that has not followed in suit yet and has not gotten below the 200. Now, not entirely true, because as of today, you actually did get down here. So as of today, you are down below the 200, but the purpose of this class and the way I presented it to my Omniacs in the last 2 days was specifically to prove that you do not need to know anything else except for that the leaders broke the 200 and the follower is absolutely going to do the same. It's what the follower did. Here is where we are now in the S&P. Traders, thank you so much for coming to today's webinar. I really hope this helps to keep you in tune with where markets are and where they're going. And I do this every day at livewithoscar.com. Please feel free to join me. And of course, it'll never let me type that all in, but come join me at my website, and I would be more than happy to teach you these techniques live as they happen. So if you come join me, you will find this is what we do. This is how we do it. We are always here trying to teach you Omniacs and traders alike how to get through these rough and tumble markets. Thank you so much for coming, everybody. A round of applause to each and every one of you for showing up.
Thanks, Oscar. We really appreciated you having you here in our webinar room. I always come away from your presentations feeling like I've got a new edge on what I'm doing in my trading. I think I speak for everybody but when we say we are really, really glad to have been in attendance here. I put a link up there. You can actually click on this live link on the screen and go straight to Oscar's page. Definitely check him out. Oscar really knows what he's doing. I'm hard.
Thank you, everybody. Thank you very much, David.